Hi, Jacob. How are you doing today?
Good, Gilbert. How you doing?
Not too bad, not too bad. Thank you for joining us for this program. Nice to chat with you a bit about your company.
Yeah,
Your
good
company
to,
is pretty
see you.
interesting. Just from the beginning
Yeah,
point of view, your company name
yeah.
is sort of related to First Nation, as in Kiwetinohk. So it's kind of like, why do you choose such a name? Because it's so difficult to pronounce to begin with.
Well, it's a great question, and Gilbert, good to see you again. Appreciate you having us out at the conference. Kiwetinohk actually means north or northward in Cree, and our Chief Executive Officer, Pat Carlson, has been hugely involved and believes that stakeholder relations is critical to the success of any company. And so one of the largest stakeholders of any oil and gas operation in Alberta and actually in British Columbia tends to be the Indigenous communities. And when you go in there and you operate, we think you need to operate, in cooperation on their lands. They give you the opportunity to work with them. We provide opportunity. And so that's really a core part of the principles that Pat has instilled in each of his companies. That was the same thing in Kiwetinohk. His prior company was called Seven Generations. Some of your viewers might have known of that company. After successfully building that company and then looking to start Kiwetinohk, he was actually approached and asked if he would name his next company from an Indigenous name. It's a Cree word. It means, as I said, north. And it was given to us by the Treaty 8 Cree language, and Barb Belcourt was someone who actually teaches Cree up in Alberta, and she gifted us that name through a formal ceremony. So we're very proud to have that name.
Yes, thank you for your explanation to that. And let's talk a bit about your business. Obviously, two major things for you, which is also quite interesting. Let's talk about the first, your upstream natural gas assets. I notice you have a pretty aggressive target. By 2026, you want to reach about 40,000 BOE per day. So tell us through how the process, what sort of steps do you think you should take in order to reach that level?
Yeah, sure. Well, look, we've already come a long way, Gilbert, on that path. We set out 10-year goals when we listed the company on the Toronto Stock Exchange, and we said we'd like to get to 300 million cubic feet a day just of natural gas. So we think natural gas is going to be a huge transition fuel, along with oil into the future. And since acquiring our assets, we've grown them by 143%. So what you'll see is we actually had production of 26,300, which is the midpoint of what we expect to achieve in 2024. And then by the end of 2026, we expect to get to that 40,000 barrels of oil equivalent day target. We think we have extensive running room in our Duvernay and Montney resources. That capacity aligns with our infrastructure capacity, so our owned gas processing plants and our pipeline capacity. We own all that capacity today, so we're just filling that capacity and getting our field to 40,000 BOEs a day. What that'll do is it'll make our field more efficient, more capital efficient. You might have seen in our first quarter, we already started reducing operating costs as we fill more of our infrastructure. So that 40,000 gets us to a point where we're full on our infrastructure. We think we have more reserves. We could grow our asset base to more than 40,000 BOEs a day, but we'll make that decision when we get there. That would require us to maybe build some new infrastructure. But I think we have ample infrastructure and reserves and resources, and by 2026, we will be able to achieve that. We've doubled our production already, and we're looking to double it again.
So one of the interesting points in your business is, besides the natural gas asset, you also have some power generation projects in the mix. Can you tell us a bit more about this progress? And then I noticed there's some potential development in the second half of this year.
Yeah, that's right. When we began the company, we saw two big opportunities. One was acquiring liquids-rich gas resources, so we did that. And that was really targeting about 95% of our capital. We also saw another opportunity where there was an ability to take on early risk and get reward for the company, and that was in the power development stage. So we've spent about 3 to 5% of our capital, Gilbert, on 7 power projects. They're development stage. We have 920 megawatts of solar power across 3 projects, and we have 1,225 megawatts of gas-fired power development projects. That's across 4 projects. So we have those at a regulatory approval stage in Alberta. There's a regulatory body called the AESO. It's shorthand AESO, Alberta Electricity System Operator. It has a very prescriptive plan. All of our projects are beyond phase 3. It's taken us about 3 years to get the projects there. So we're now getting our first 2 projects ready to take them to market. And we are going to look to ways where we create new value for the company. We never planned to spend capital to construct these projects. We just thought we would do the early stage planning and then create opportunities for our business, either through monetization of these projects or just getting non-dilutive financing to construct them. And then we have markets for some of our future production. So our Homestead solar project we're working on right now, and we're working on our Opal gas-fired peaker. So the solar project's 400 megawatts and the peaker is 101 megawatts. We're bringing both of those to market this year and look to have more progress announced in the second half of the year.
Looking forward to those. And we also understand this is very clearly that the investment trend is people always talk about ESG, how investors want to know companies apply that in their business. So I also noticed you also have an annual ESG report in your website. Can you tell us more on that, and why is that important to you?
Yeah, absolutely. This kind of goes back to the way, our whole strategy is formed, and building on Pat's, principles of stakeholder relations. ESG fits right into that. And we have a saying where to be profitable, you have to be sustainable, and to be sustainable, you have to be profitable. We see them as 2 sides of the same coin, Gilbert. So you have to be doing both to be successful. And so ESG is just integral to our business. We put a lot of effort. I think it also demonstrates from a Canadian standpoint how important we view the environment as we continue to develop resources that our world needs. And so from our standpoint, you'll see in our latest ESG report that our reporting on these is guided by the Financial Stability Board's Task Force on Climate-Related Financial Disclosure and Sustainability Accounting Standards Board. Those are 2 regulatory bodies that offer a lot of insight into how you want to report your ESG metrics. We're following those. We are actually well on our way to reducing our emissions from methane venting by 50% by 2025 from a 2022 baseline. So we're well on our way to achieving that target. We're actually the first Canadian company to join the United Nations Environment Program Oil and Gas Methane Partnership. So that's where we actively and very prescriptively monitor the methane that's coming out of our operations. So we've received a gold membership on that. We're very proud of that. For our solar projects, we're working on what's called agrivoltaics. So we're developing a project that investors could come and purchase off us. We also are putting plans in where they could integrate agricultural activity with the solar panels. So we're doing that work so that it creates the most value for that project, and it actually brings together vegetation and energy. So leading on that front. We also have 2 carbon hubs that we're evaluating for the province, and we're looking at how that may be a future where you have natural gas-fired power with the ability to sequester the CO2 emissions. So of course you have a very long life for natural gas, and you have clean electricity. So these are all the things that we're building into our future plans to ensure that we're on the leading edge of sustainability and profitability.
And obviously your company is still fairly new to the public, I believe, not too well known yet, but since the beginning of the year, you have gone up a bit over 10%. Do you still think your company is undervalued as of this point?
It's difficult for me to say. I'm not an investment advisor in terms of where valuation. I think that's always for the investor to make that decision, Gilbert. But what I do think is our results speak for themselves, and we hope that that's contributing to people's conviction to buy our story. I talked about our production growth, 143% since we bought the assets in Q2 2021. We're on our path to double. There's a chart that we have in our presentation that shows that we own 39 of the top 100 Duvernay wells that have ever been drilled on a cumulative production measurement. and 6 of the top 10 were actually drilled by our team. So after we acquired the resource, we've now drilled 6 of the top 10 Duvernay wells. We think that's really exciting, and it shows to the experience we have in the team. We had record annual production last year of 22,500 BOEs a day. Our first quarter, you would have seen we had 27,566, another company record. We've invested $577 million in the last 2 years growing our asset, and we've achieved a return on average capital employed of 26%. That's a full corporate return after all costs. So 26% on 577 million compounding. We think that's really good performance. We've done that all without issuing any new equity, and we've kept our debt levels below 1 times debt to cash flow. So we think the results are speaking for themselves. When we look at our asset, we actually see the market on our upstream business pointing to a valuation of $1 billion to $1.4 billion. We think right now our enterprise value, equity and debt, is only $700 million. That's another value component that we say certainly adds. The other thing is, if we just look at upstream comparables, so look at companies that are in liquids-rich resources in Alberta. So, comparable companies that are in the Montney Duvernay, they're trading at a premium to Kiwetinohk's share price on average about 3 times cash flow. So if you look at our valuation, if we could get 1 additional increase in cash flow, or 2 or 3, those would actually point to, at a full 3 times cash flow, that would point to an additional $15 to $20 a share. So we think there's huge value support in our current stock price, and lots of indications to say that we think there's value in this story. So we're just going to keep focusing on delivering great results, both on the upstream and the power, and we hope that we can continue convincing investors to join the story.
It looks like you have a good team, a strong team to execute your plan so far, and investors should be following your story. There's a lot of things happening in the future. Thank you, Jacob, for your time here, sharing your story with us.
Thank you, Gilbert. We'll speak soon.
Yeah, touch base later. Thank you for your time.
Take care.